What is going on, guys? Thanks for joining my channel, Robinhood. This is Bob. In today's video, guys, I'm going to go over how many shares I need to get for me to retire and give you a timeline, how long I believe that will take, and also answer a lot of viewers' questions, just the common questions that you guys have been asking me, why I went all in with AT&T, what my strategy is, and what's my exit plan. So let's get started. Okay guys, what kind of made me do this video was a question from Finding Profits. If you are not familiar with his channel, you should definitely check it out. He does have some very good information. So he asked, what's your goal in total shares of T? Also, are you paying down your margins? So my total goal, if we check out my spreadsheet here, I did go over my investment strategy on the shares I currently have, how much it should make me every year, every month, every day, every work day, which is 260 days a week if you're working 5 days a week, and also how much I get paid an hour on a regular 8-hour days on 260. So with the current shares and option trades I have now, I would be making $12.01. So my goal, doing the math, I do work 2 days a week only. So my goal is 12,500 shares. This will bring me a total of $26,000 in dividend pay. The options, I could do 125 options, roughly $5 per week. So it'd be 125 times $5 times 52 weeks. So in options, I should make about 32,500. So if we add in the total shares, the total dividend, and the total stock, it would be total in 1 year would be $58,500. 1 month would be $48.75. Per day would be $160. Per work day, working 5 days a week, would be $225 a day. And then per hour, 8 hours a day, would bring me $28.13. So this is kind of my goal here that I could technically retire off of. Realistic timeline is actually not that long. I believe that I can get up to 1,250 shares, 12,500 shares in about 1.5 to 2 years time. So even if you guys take the taxes out, with the dividends, they take about 15% out of mine, and with the option trades, it's about 25% in taxes. So I would be making a total per year $41,632, and remind you, this is after taxes, $34.69 per month. Every day, $114. Workday, this is 260 days, just if you're working 5 days a week, is $160, and then per hour, if you work 8 hours a day, it would be $20 an hour, which is still not bad with taxes taken out. Margins though, per year, this is also deducted out of it as well, so I am paying $4,843 in margins, but as long as that I keep all of this up, I'm able to collect the dividends and also able to collect the margins that I expect to get, then this would be how much I would have after taxes, after paying margins, which is not a bad deal at all. And to answer his second question, if you do look at my portfolio here, if I do plan on paying down my margins, there's two ways to look at it, but for the most part, I do not plan to pay down the margins. I'll give you an example of why. So I've started my 52-week challenge on December 23rd. I was at $62,531. I'm currently at $83,967. So that's roughly about a $21,000 increase. So if I was not using my margins in general, I would only be about a $10,000 or $11,000 in the green. And the stock that I have does hold roughly a 7% dividend when I purchased it. So as long as the stock does not go below a certain amount, or if I technically do not get margin called, then I just plan on holding the actual stock itself. So I'm not too worried about the price going up and down. My main goal is to have as many shares as possible. And when I say margin called, my margin maintenance is at $41,618. So as long as my profit or my total equity does not go down that far, I will be fine as long as I am able to buy and own the stock. So hopefully that answers your other questions. So for the most part, in short, I will just keep borrowing margins until I hit my 12,500 mark, and if I do end up stop working or retiring, then I would use the options and dividend payout as my income if needed. Next question is from Shahraz Ali. Hey Bob, is it possible to do a video on how you approach stocks every day, like a walkthrough or what you do? So I asked him if this meant buying and selling option calls. So he said, yes, please, sir. Video wise, it's hard to do a live option call on here just because you don't know when the options will sell or be called back. And a lot of times I do it on my phone. If we just check out AT&T here, just on Friday, buying and selling option calls was a pretty crazy day. This is probably the most I've bought and sold option calls. As you can see here, I sold a call, I bought, I sold, I bought. This is just all in the same day here. But I'll give you an example of kind of what I look for. I'm pretty familiar with AT&T, but it's always risky doing this type of option calls. So what I did mostly on Friday, I ended up buying calls and then selling them at a higher price. So the strike price that I focused on at this day was $31. The stock price high was $31.43. The stock price low was $31.05. So my trading usually happens from 9:45 to 12 o'clock. I'm usually at the gym and I'm just doing it in between sets, just to be honest with you, just setting the buy sells at a certain price, and then if it goes through, I'll just do it all over again. So this is kind of the chart that I'll kind of best describe on what I look for. So if you look at the premium of how much you would have to pay, because at this option I'm buying a call, so it's going to cost me to buy a call. So if you look at the premium from $31.20 and $31.15, it's roughly $19 to $21 that it's going to cost me per share. So this I focused on, I would sell it at this price to try to get this premium. So anything in the yellow here, from when it hit $31.14 to $31.10, I can buy this from $15 to $18. So I'm not too greedy when I'm doing option calls. So if I were to buy this at $15, I would only probably try to make a quick $2 profit, but I'm buying probably 10 to 20 to 30 options. So even though it's $2, it could be, $20, it could be $50, it could be $100, depending on what I do. So if I buy it at a $15 mark, then I will try to sell it at a 17. So if I buy it at an 18, I will try to sell it at a 20. So I'll keep track of these numbers here. When I think it's kind of hit a little bit of the bottom, or it's staying around the same price, bouncing from, let's say, $31.13 to $31.16, I'll wait till it goes back to $31.13, buy it for 17, and then try to sell it for 19 or possibly 20. So if we look at AT&T, the actual stock itself, how it happened on Friday, it started off really high, but sometimes that happens. It started in a negative, then it bounced back up. So I waited to see if it was going to fall or if it would continue to go back up. As soon as it did the first initial fall, and I just guesstimated, this was just a guesstimation because I've been watching the stock so much. So I ended up buying a couple calls at this time here, just doing a $2 strike price. It ran up just a hair. It literally ran up 2 cents, 3 cents, and I was able to sell it back for $2 more per option. Then I did the same call. I bought it for the strike price of $18 and then $17, and then I sold it back at $19. Then I did the same thing here. I bought it at about $16 per share, and then I sold it for about $18. And then once I bought it again around here, I had to wait. I waited, but I set my options to about $18, $2 more, and then I got it. So I basically did this all until 12 o'clock, and then I stopped. So if we do check out here, I'll kind of go over it with you of what I did. So we look on the 30th here. So if you see here, I was buying a call, $18 for 10 contracts, and then I literally sold it within a few minutes for $200 for 10 contracts. And then if you look here again, guys, I bought another call, 15 contracts for 17, and then I sold 15 for 20. Did it again. I bought 15 contracts at 18. I sold 15 contracts for 300. So this isn't a lot of money, but when you add it all together, it definitely helps. And like I said, this is in one day. So this one I only could do 3 because this one didn't sell at that time. So I bought 3 contracts at 15. I sold it at 17. So I'm just looking at a $2 to $3 increment at this day and time. It changes per day. It changes how the stock moves. But also here, I did the same thing. I bought a call 25 at 15, and then I sold 25 at 17. Towards the end of the day, I don't like to sell call options on the early in the day just because the stock could go up and I don't want to sell it. So I just got a measly $1 per 53 contracts, 5,300 shares to do a sell call. But I did sell call a couple days before, and I did make some good premiums off of that. I'll do another video on this one on a selling a call option, but this one I'm going over right now is buying a call. So hopefully that will answer your question. But like I said, it's really tricky because anything below this amount you would lose money. So originally I bought it at 18. So if it fell all the way down to 31.06 and didn't go back up, I would have lost a decent amount of money. So it's always risky when you're buying a call because later in the day, time decay definitely hurts you. And usually after 12, that hits you the most amount of time. So hopefully this answers your question. If not, hit another comment and I'll try to clarify it a little better. Next question. Okay, the next couple questions are just pretty quick. Edson Castro asked, he said, I own T but 150K in it. That's crazy, LOL. So if you are a dividend investor, I don't recommend this for everybody, but for me it's working out just for the type of stocks and options that I do. But when I look at a stock, you ask yourself a lot of questions. Is it a good paying dividend? Has it been paying their dividend for a long period of time? Has it been increasing their dividend for a period of time? And then if I'm doing option trades, when you're looking at growth, I would rather the stock to stay the same amount forever and make my options every day and not be forced to sell the stock or buy the option back. So in my case, AT&T answers and checks all the boxes, and it's perfectly fine with me to have all of my money in AT&T, especially if you're looking for the long run and to try to retire off of it. Just in my book, like I said, I believe AT&T is going in the right direction. So if we go to the next question here, it is one of my favorite channels as well. If you look at next question, if you guys have not checked out his channel, his Stocks for Dividends, he has a lot of good short videos with good information. It's just compacted in one, so you don't have to watch one long video on here, but he is a great channel to watch. So he just said, all right, bro, I'll head it over and we can go get our AT&T tattoos. I'm definitely not going to get an AT&T tattoo on there. I do actually have a lot of tattoos, and I am getting older, and I don't plan to get any more tattoos. And the last one, we'll end it with another popular YouTuber that I like. It is the Dividend Tree. He says, bro, you got to change your name to Mr. T now. So I'm definitely not going to change my name. I think Robinhood is fine, and Mr. T is one of a kind. So that's going to be all for today, guys. And if you guys have any other questions you want me to answer, definitely let me know. Let me know what you think about the strategy, and if you guys have any type of AT&T stocks or any type of dividend stocks, because this doesn't just work for AT&T. You can basically use it for any type of stock that doesn't have the most growth but a high-paying dividend. So let me know in the comments. Definitely hit the like, subscribe, and comment below. Thank you guys. Have a great day.